Good people, it's the crypto sniper coming back at you. Yep, there's been developments. We've been waiting for clarity on this. And in terms of our scenario for a potential reversal on a head and shoulders for Bitcoin, that has totally been cleared out. It is inaccurate, it is wrong. And the great thing about having a view with anything we do, there's a level where it invalidates. And the invalidation level was on the top of the head and shoulders. So the narrative surrounding the Bitcoin ETF has taken control over this market. It has been bullish, and we've had the beginning of this week, Monday, and now, of course, Tuesday, we've seen upward moves, and it's cleared a very important level that had been a bit of a psychological level of around 32,000. We'll be doing that, showing you that when we pass to the clips. What else you're going to see in this video that is going to be very insightful? A smaller cap long that our community pushed, yep, and found and has traded and has absolutely done a likely to do a 2x, well on the way to having completed that. Also why no one's talking about Ethereum right now. It's all about the Bitcoin ETF. You've seen Sol run, you've seen Chainlink run quite substantially, but in actual fact, there could be something about to start to happen. This could be the relative lows in relative valuation between Ethereum and Bitcoin. We'll be showing you that as well in terms of this. Then if this is, remember, I also just want to clarify, when you get something incorrect, it's also feedback. So a couple of times when we biased to the long side at 19.9 and said buy that dip, and again at 24.9 buy that dip, both those turned out incorrect. Then we were cautioning about bearishness and saying it could be a short at the 27.5 at 29 level on a head and shoulder. That ends up wrong. What you're getting is kind of feedback. So on the two bullish calls that had technical merit, you turned out to be accurate. And on the one bearish call that had potential technical merit, it turned out to be invalidated. That tends to be feedback. So at the moment, you shouldn't, I wouldn't be overtly bearish. However, I would bias to square. So there's a couple of things I need to explain. There's bullish and there's bearish, and there's a massive gray area in between. Most people seem to have a very binary approach, like a light switch. The light switch is either on or off. In actual fact, you can get a lot of churn space that is either consolidation, particularly in the end of a long bear, which we're probably at, and the beginning of a new bull. You can get a lot of churn space where, depending on what time frame you are, it could be both bullish and bearish on different time frames. So we want to just say, if you're inaccurate on a bear call, that doesn't mean you're now flipping, reverting to full bull. So we'll cover that when we turn to the chart. So we're going to do the Bitcoin analysis, the Ethereum analysis, tell you about INJ, injection. Was it injection or was it injectable? I don't know. We'll clarify the name that broke to the upside. We're going to have a look at a little bit of cross valuations for Bitcoin against other asset classes, and also the dollar, and why the dollar just having a bit of an off period has also been support for Bitcoin. The dollar has been very dominant, and this was part and parcel possibly of the head and shoulder structure that wasn't. And as a result, we have to have a look at that, and that even leans on the debt markets and interest rates, which were of course getting higher, that were causing the stock market to go down, and also leaning on crypto. So as the interest rates just made, that is bond debt interest rates, and I know you're in crypto, so you'd think this is not interesting. We cover this in great detail on the Market Sniper. However, we have a weak ban at the moment for a strike for pointing out our short on Pfizer, a tweet that actually said that was from Pfizer itself, that admitted that they actually were causing their treatment, their mRNA treatment was in fact causing in young males certain heart-related disease. So we don't want to talk too much about that because we might get the same strike here. But anyway, we're here to give you the update on Bitcoin. Let's go to the charts. So here we are, charts on Bitcoin. So here was the original bull structure that we spoke of at length. those were the 19, just sub 20k, 19.9 entry, and then there was the first visit back to sub 25k, the 24.9 entry. Those turned out both good for short-term moves and are in the money in terms of where you are at today. However, the concern for the bearish side was we started to spend too much time. So why were we wrong? It's important to do this, and a lot of people will come and give us a go in the comments, and fair play if you want to. It's important to admit when you have a scenario that hasn't played out, that didn't turn out. So that's what we're doing here, and why. So that people understand, given the same set of circumstances, I'd probably still say the same thing. Why? Well, until we broke this broadening structure here, which was all just potentially a right shoulder type structure, until you broke and held above that, it wasn't clear that it was happening. I was updating the community more recently that, in fact, now with this early momentum in when we started to get above 30, that we were likely done and the head would fold. But this is not typical upside continuation price behavior. What essentially you have here is a 25k, you have a marginally higher highs, and you have in essence a broadening structure over here on a bullish move. And this isn't typical upside continuation behavior. And in actual fact, there's a small warning in this also for all our Bitcoin friends. Especially if you're crypto, you came into the markets through crypto. Markets go up on the rumor of something almost likely to happen, and the insiders will absolutely be buying knowing on a fact before you know a fact, and they sell off on when the public gets told the fact. So it's buy on the rumor, sell on the fact is the catchphrase. It's a cliche, it's common, you'll hear it a lot, but be cautionary about chasing into any crypto buys now. If you weren't already long, now might not be the immediate time to do that, because it's quite possible that you get on any announcement, okay, you got ETFs, and there'll be a spate of them. They won't approve just BlackRock. That'll look a little bit special favorite. What they could do is, 3 or 4, Coinbase, whoever's in the mix, all the names, you know them more than I do, all get announced. Well, if you think those guys weren't already preparing for an approval well before this and have been buying Bitcoin throughout this process, then then you're naive. So in other words, part of this move up is probably on the back of the fact that they know that it's likely to be approved. And what then happens is people will not buy through exchanges, they'll buy through ETFs. So you'll have a reduced buying power on the exchanges, and the exchanges will have been behind a lot of accumulation now. So it's not impossible that you don't get a slight correction. It could even correct to the splitter here, for example, after it's all baked in. So there'll be an initial flurry, there'll be some retail fools who'll buy on the fact, and then they'll shooting star up and then potentially have a flush out. So be careful about timing in terms of any new entries. If you think, damn it, the head and shoulders hasn't happened, I'm going to swing from bear to bull. Remember the gray area in between. Remember timing, entries truly matter. So with that said, it does seem like the original target of 4406 that we gave for the original pattern might still come back into the game. However, it may well occur. Why did we do, as a short explanation, the bear pivot after being biased long? Because of time. This event occurred early in March, that you broke the 25, and in actual fact you returned to 25 in September, guys. 3rd month to the 9th month, you spent 6 months and you made a marginally higher high. You returned to 25 once there in June, and that should have been the last time. It's okay to have a revisit to a key level of significance once. To have 2 revisits after a 6-month spell Also, we have time stops when we expect this to have performed, and we expected it to have performed by December, something that occurred in March, early March, should perform by December. Now, it's got back on its horse and could still do that, so December around about here in terms of time frame, but it was lagging on time frame and showing a real heaviness. A higher high, which gave us our possible head, that wasn't, and then a retracement all the way back to the same low. So that means we fell further. We made only a slightly higher high coming from a much higher space. We came from the 25 there, not from the 19 for that move. So we made only a marginally higher high, and then we came all the way back for a second time, and loads of time was being burnt up. So that is why, for everyone who is wrong, technically, we came to the conclusion that there's a new headwind for Bitcoin. But this narrative, the weakness of the dollar has also played a role. We'll touch on that, and the ETF. So incorrect on Bitcoin. What else have we got to tell you? Well, let's have a look at that dollar, and that's a very quick understanding for the bond rates. I know people have limited understanding or appetite almost for bonds, but the dollar has been in a continual upward move throughout this period, and that was what was part of the lean on Bitcoin. That excuse me, let's just get that tag moved. We then had a little bit of a pullback up and a pullback again. I actually think this is going to form a falling wedge and bump again, so I expect the dollar to go higher again. So that's why I say be careful about overtly being too aggressive. This probably goes higher and will head for the 110 in my overall opinion. Why? Because the Fed, needing to support the dollar, needs a strong dollar. What are they going to do? They're going to be at the forefront generally of interest rate hikes, and their bond and debt markets rates are continuing to be some of the highest. That means it's devaluing the bond market. China has been distributing its holdings, and who has been buying? The United Kingdom and Japan. Now, for those of you that followed our interview with Professor Werner on Japan, you will know that after the war, both Germany and Japan are essentially controlled proxies via America, which is of itself a controlled proxy of the City of London. Now, to you, some of you will be going, what? How did he get to all of that? There's an immense amount of reading you need to do, but if you just watch the Professor Werner on the Market Sniper channel, you'll realize that post-war, the Japanese largely weren't allowed to go too much into defense anymore, so that they could never be a problem. And the Bank of Japan was heavily controlled by the Fed, which in of itself is controlled by BlackRock, Vanguard, and the City of London and the legacy families. A lot of reading you need to do to get through all of that. But nonetheless, what we are actually seeing is China distributing the debt, and we saw a blow-off in the debt market making 5%. The 10-year, one of the key contracts of debt, the US 10-year, went through the 5% mark. So let's just highlight that to you so you see something. And that made a key target. Throughout this period, the rising interest rates have been a lean on gold and a lean on silver, and also were placing pressure on Bitcoin. Now Bitcoin gets the ETF news, you get a weakening of the dollar and a top out after having run a key level of significance of 5% on the bond market. So throughout this run up, you'll also note that the SP 500, which if I just split the screen, which is another risk on asset like Bitcoin, was also losing ground despite the performance. Let's put that in there. S&P 500, SP 500. You can see here as we go, let's pull this through. You see the S&P 500 from approximately the same place at a higher point, down, down, down. Lower lows, lower highs, at the same time rates, higher highs, higher lows, going up. So if you have a look at that, let's just reframe that a little bit. You can see it quite clearly from here to here. So this has been a lean. It's been putting pressure on it. Now, having run the 5%, we get a little bit of a pullback for now. But the dollar, as I've highlighted, probably in a continuation pattern, but pulling that back a little bit, which will give Bitcoin and gold a little bit of upside relief. But if it starts to go back up again and the rates start to go back up again, it depends how long a pullback we will have. You can expect further debt concerns and pressure. But everyone will say, but that's why we have Bitcoin. It's the new money. It's going to save us, etc., etc. Well, actually, the pressure that is bringing on corporations and on personal personal finances of people with debt, credit cards. There's $1 trillion in credit card debt on an average payment of 21%, by the way, in the States. And never mind subprime cars, normal car financing, student loan debt, etc., etc., all having to be paid off, all potentially exposed to the increased interest rates. That puts a lot of pressure on the consumer. The consumer sells his Bitcoin, anything that's liquid, to pay his rent and meet his food bill, etc., etc. So you tend to get this trickle over effect that is going to lead to the liquidity being sold off. So we have to be a little bit cautionary about losing our heads about Bitcoin. Okay, so that's just a little bit about the dollar and the other things that have been going on in the markets as a whole. Debt markets are in trouble. So let's have a look at something else inside the crypto space. And I want to talk to you about a crypto that's not getting much news. And think about it, the next step, remember you have to be 2 steps ahead. If everyone's talking about the Bitcoin ETF, no one's talking about the potential that a similar ETF will come into play for the likes of something like Ethereum. And I want to highlight the relative valuations of Ethereum to Bitcoin generally. Maybe we can get slightly, not a week, we do a 3-day chart, get a little bit more detail on this pair. So this is Ethereum versus Bitcoin. Now, I don't have a dog in this fight. I'm not preferring one over the other. I'm not getting involved in that discussion about Bitcoin being maxis and Ethereum maxis or all these other tribalisms. This is just technical assessments. And what's actually happened is you've had a real reduction in the relative valuation of Ethereum to Bitcoin. However, right now as we speak, there's a bit of a buyback here, and I'm not sure you're going to run that low. So what this is turning into is a potential relative value point where Ethereum may be at one of its cheapest positions relative to Bitcoin. So there it is. It's having a final capitulation in here with a possible hammer. All bets are off, but this is the lowest risk entry. All bets are off if you run that low. Then it's not what I think it might be. But if this level does stand, and it's difficult now, some people are already thinking, what does this mean for Ethereum then? Some of the smarter people, while everyone else is talking about Bitcoin, is saying, what does it mean for Ethereum? What you could indeed get is a nice strong up move, a third impulse, which I haven't got the space to draw because I chose 3 days instead of a week to get you more detail. And you could actually have an upside continuation pattern where this has been a big bull coming in here. We have a lot of macro Ethereum outperformance versus Bitcoin to come. So something for you all to bear in mind in terms of this. Could it be the next talk is actually, and I want to also highlight, if we go to coin market cap, the relative valuations, you look at the week so far on Bitcoin. Bitcoin dominance obviously is up. We'll take a look at that number. It's been hoovering up the honey and leaving a lot of alts behind. Ethereum has actually done pretty well at 14.82, but that's barely over. It's not quite 220 billion. Bitcoin is at 670 billion. So it's a substantially higher relative market valuation. Many will say, well, it should be that, and it should be a lot more. I just want to highlight here that we have lots and lots of major reversal structures on a far bigger time frame this red inverted head and shoulder that triggered here has implied a valuation at around 10% for Ethereum. And if we'd drawn this particular target a long time ago, that could take you right away up to 13. For that to occur, we need a bid up to start happening. So I've taken a bigger time frame here so I can then draw this for you. This needs to continue to reverse. More people should be saying, okay, the ETF BlackRock for Bitcoin is almost assured now. No doubt we'll be hearing that news. That'll be a sell on the fact moment. But the next rumor has got to be number 2 in the queue. And that could lead to this structure coming about. And as I'm highlighting here, this is still, this wouldn't happen overnight next week. This is all macro charting. Each candle is a full week, guys. But that would lead to a possible 13 instead of a 10, 13% of a Bitcoin if that were to occur, which is quite a substantial relative valuation increase for Ethereum to Bitcoin. So something to just keep a little bit in mind over there. So what else have we got for you here? Well, that's the Ethereum against the dollar chart. So let's just leave the relative valuations. I like to do that. But you could argue there's a combination of either a channel that is being broken there, which is an upside continuation channel, like that. Or, depending on how you choose to draw it, you may even have had a falling wedge structure, something like that, that has given you the squeeze and the momentum, which in some senses I'm quite sympathetic to as well, making that a good potential buy signal. And you may actually get a little bit of catch up. We owe it to ourselves to have a look at that BTC dominance chart, which is going to be pretty puffy and strong. And you can see we're knocking on the door of 54%. I think there's been a lot here in dominance, and whilst it's great to be winning out on Bitcoin longs, there's been a lot on dominance, and that's a pretty strong move. So I would already start to think a little bit, if I had been in Bitcoin all through this time, I would be open to certainly picking up some of the alternatives that are available, such as Ethereum. Not that it's a great innovation token, not particularly anything else apart from the technicals on it. We also have the smaller caps. We had a community member that posted a setup for us in our community on the microcap that was INJ. So congratulations to him. So inside, we talk about so many things, guys. I don't generally tend to overcover small cap tokens. Why? Because all the scammers are there. All the people that have done anything, have pumped something, are holders, and they're not dumping it on you. We've seen this whole game. So I tend to give coverage of the top 15, and most of the time it will be Bitcoin and Ethereum, and then occasionally it will be, the likes of a Binance token, when we highlighted the Binance dominance pre the FTX collapse, which saw the Binance exchange do exceedingly well, and then highlighted how it peaked out and how it was now getting hit. Sol we've spoken on, generally typically top Ripple extensively just before the pump. Now we're leaving it, we're watching it and observing it. But just so that you know, there is so much going on in our community in terms of trade setups, and smaller accounts are welcome to trade less liquid items, and if you get good structures, they can do exceedingly well. So this is INJ. Know very little about it. You can see that bid coming back in the dollar, by the way, over here as we move over it, which is why I say be careful. But here's the INJ chart that I'm looking at, and this is something that's heading through 14 that you could have got long in the 7s in terms of that community setup that was put in over there using HVF method, and that's a 2x, and never mind the leverage. Should you be doing it? Is there enough volume? It depends how big your account is. It depends if you understand money management, and if it's also how prudent you are in terms of utilizing and knowing that anything you get into, you need to be able to get out of in terms of it. But that's turned out a great potential trade, and it's looking pretty good for that 14 run, sitting at 12.5 when it was way down at 7.5 some time ago. So it's very difficult to, we don't tend to update on, I don't tend to do bull calls on smaller cap items. We did for fun because we spoke with Richard Hart at one point, cover a little bit on Hex technically, because I'd had a long-term holding on it, so I had a sort of vested interest in it, but generally it's not my game. It's generally not my game, covering the big boys and giving our true opinion, and we are never going to be the influencers of either way, and we will never be on the other side of a trade for you. So we will be telling you exactly what we think, and we want to maintain our integrity. And I just feel in a lot of these smaller caps, I don't need to mention names, guys have tried to make hay. So in terms of YFI, I did well on this. It covered my Bitcoin losses, but it's also gone up with all the things. We were selling from 6.2 out here and down, and I took off a couple of times because it was a little bit sketchy, the whole environment with Bitcoin. It wasn't clear. We were early scenario casting that shoulder. There was no knowing, but clearly there was no knowing. We were wrong. There was no knowing that it would do what it would do. So we were snatching on a shoot and scoot basis profits out of this one. And it's paid me enough to cover what I got wrong. So in some senses, the best thing in trading, and this is an important lesson, is when you're wrong and you don't lose money, or you don't lose significant money at all. There was someone on Twitter who was like 17+% down, who'd got in earlier than we'd suggested. And as I said, we weren't chasing in on Bitcoin. Our main shorts were YFI and one other that was in our premium area. And the Bitcoin was only a case of, look, if it gets between 27.5 and 29, it might be worth a spec. And I took $457 loss on it. And I was like, this isn't doing what I expect. It's around that little tech level. I got in up, mid 28s, and then I got out before it even crossed 29. And I had that stop already in. I got taken out on an ETF wick. So that's like what I call small beer. When you're speculating on something that is not yet a confirmed pattern, you've got to be small. And there was someone posting a P&L, what should I do? And he was like 20% down, 17 point whatever on his account. You cannot have a 17+ percentage drawdown on a single trade. Guys, do not do that. Do not do that. You get two of those wrong and you've lost probably 35-40% of your account. Then on a much smaller capital base, 60% of what you originally had, you swing even more aggressively to get back to where you psychologically once were. So you were 10 grand, now you're 6 grand, now you trade twice the size for a much smaller move because you're not so confident about it, but you want to get back to 10. This is what I call the spiral of doom that takes you in. And it's not always the first thing that you get wrong. It's the reaction to being wrong in subsequent actions you take thereafter that compounds the error. It's kind of like, it's not like the original mistake with politicians. It's the lie that to cover the mistake that ends up creating more of a narrative, and the lie to cover up the lie to cover the lie that was told about the lie. Come clean up, get square. It didn't work. Remember, success in trading is not how many times you are, inverted commas, right. We prefer the phrase accuracy and inaccuracy. It is more a case of how much you make when you're right. You can be wrong 60%, 70% of the time and making money because you're trading 10 RRRs on the 30% that you're accurate. And you're looking for a really specific big move. You could be right 90% of the time, but you're stealing 5 pips here, 10 pips here, quick percentage point there, and your stop is 30%, but you only need to be wrong once and it devastates you. So it's entirely strategy dependent. We are tight risk, highly expansive moves. We're more likely to be wrong, generally, because we're looking for really tight squeezes. But when we're wrong, it's small beer, and it's something we're very used to. We wipe our face on it. So just a little bit of a narrative there for you. A lot of descending triangles going low volatility that could actually be bottoming instead of continuation. The lowering volatility and the skidding into lows, especially when you are channeling like that, these things were worrying me, so we were reducing into this. That's not continuation. The other way around would have been continuation to the downside, something like that. A counter grinding rally. When you're grinding marginally lower, that's actually a setup for exactly what happened, the bump to the upside. So again, luckily, because we're quite active on managing those positions, when things aren't performing the way we expect and the news flow on Bitcoin was getting and the price behavior was getting the way it was, it's something you need to consider and get out. Okay, so that's a little bit on that. Some guys asking also about, what happened to XRP? So our macro on XRP has not changed. This is XRP dominance though. And as you can expect with Bitcoin being dominant, that is absolutely getting killed. And on a lot of dominance charts, it's very similar to the ETH-BTC chart. ETH-DOM will look like the ETH-BTC chart. Bitcoin right now, by being almost 54%, that's 4% through the halfway mark. It is the biggest crypto by miles. It's more than half of the market right now, is hoovering up the dominance on all the other tokens. So XRP, yep, still sitting and still waiting on the macro, but we do assess that at some point this will indeed show itself again. So let's just take a turn there because we've got a lot of enthusiasts that would like to see us cover that. So there was the spike-a-mental that came out of this small upside HVF that got totally pulled back. And this was another reason that there was no spine to generally alts that saw us concerned for Bitcoin's future. It was really, really getting smacked. Everything couldn't hold on. Now you might be basing in and around these 50-cent levels. We'll see how Bitcoin behaves after the announcement, which is almost assured, I imagine, especially given who BlackRock is. So this macro bull setup has not changed. It has not changed, and in some time will be coming. So for those that say, whatever happened to your call on XRP? It hasn't changed. It hasn't changed. It's a call across much bigger time frame. This is not a tomorrow event. This even isn't high enough. I'd expect a bigger move up and then a move to the downside a little bit, and then the big break to the targets we've already previous mentioned. It was well through. I think it was it $17 or $13? I will have to check on our macro jaws. In fact, maybe this one was one of those that have the targets still in there. Those targets still stand, but you're in a situation where you are still awaiting. Let's get the XRP chart there. This one I think has the target drawn on it as a reminder. So 1677, a 33x from current levels. So it's at about 50 cents at the moment, 54 right now. So we expect this to break up to the upside, to the tune that will run 1677. It's a reassert. Nothing has changed. It's a different time frame. So when you look at macro charts, I mean, in the FX markets, we've got a huge doubling of the USD Korean won. In fact, a more than doubling. But it is a 6-monthly candle chart. Each candle is just about 6 months, or is it 3 months? Kind of 3 months. I mustn't over exaggerate. That is coming, in our opinion, but it's, we've been watching that for years. Now, this isn't quite as extreme as that, but the point is, it is coming. It is coming, in our opinion. This is an upside continuation that is coming. However, as you can see, you get plenty of ups and downs on the way. There was a pump, there was a dump. There's another pump, there was another dump. So you could have been here, the equivalent of here, right there on this little structure. And what did you get? You got your target made, and then you got brought back down. That doesn't change the fact that at some point we expect us to make a decent move there and then break that high with a really impulsive move like that. That will see that 1677 being run. So that is the world of XRP. And there is another, which again we assert will outperform this to the tune of about 60 times. So it's almost double XRP's performance. I'm not talking about XLM. I know about XLM as well. Lumen, Stellar Lumen, for those of you. It is inside our community that you can find out. But I will show you XLM as well. Very similar structure to the likes of XRP. Let's just reduce the log. You can see it there. But again, this is pretty low down. We've got to work our way up. We've got to work our way up. You can see this when I delog this. It is still in the blood basement of the overall rebound ability. It's still got a lot more bounce to bring in. It needs to show some buoyancy first before you eventually get that break. I would like to see it bounce up to around the 41 cents level. So in just it needs to do almost a Forex just to show that it's ready. So this tells me it's still not about to happen. When it gets to 40 cents and then has a slight rest, then we start getting into, okay, this thing might not be too far off. But again, weekly chart, every candle represents an entire week, and we're talking about 2018 to today. That's 5 years ago. So a lot of exciting things to come on the macro side for crypto. A token which is better than both of these by a substantial multiple and has actually shown huge relative strength during these more shifty periods, and is still in the top 15. That is, which is liquidity wise, you could have hundreds of thousands going on millions in this token, and still have reasonable expectation of entrance and exits on your ability to trade it. If you'd like to find out more about that, book a call, and you can see some of our other trades that we are doing in the crypto space to trade you through to real wealth in reset times. This is not a typical economic environment. This is the end of cycle where there are orchestrators positioning for the new financial system going on all around you. Key changes are occurring. And if you are not preparing and you are not taking risk to build your wealth, you are almost certainly going to get hammered. So I don't even see it as optional. You have to position to survive this. There are forces that would love to see you ward of state and welfare reliant so that they can control you and tell you what to do, including some of those things that involve your shoulder and inputs there that could be very detrimental to your health. So with that all said and done, it's the Crypto Sniper saying thank you for watching. We truly value a thumbs up and a share, because we don't do any of the typical things for building our channel. We talk the truth as best we see it, and some of what we say is deeply unpopular. So the algorithm is not our friend. Help fool the algorithm. Leave us a comment. Where do you think Bitcoin will it make that 40,000 target that was originally muted? I'm interested to hear what you think. And is Ethereum about to have an overperformance period? Another very, very liquid token, of course, the next best of relative overperformance. Not because I'm a fan, but will the narrative come that ends up driving its relative performance to Bitcoin, seeing it in dollar terms going significantly forward? You tell me what you think on those two, and would you like to be trading some of those small caps, which are doing some big multiples? You can join us below by clicking the link below. The first link in the description. Book a call, talk to a friendly face and friend who is a trader and crypto investor like you. not a salesperson. Okay, it's very important. We have our own bespoke platform. We have which is completely ours. It's not a WhatsApp group, a Telegram group, a Slack group, a Discord group, or anything. Your details are not getting scraped. We treat privacy as very important, and you will be able to be in a community of like-minded, building wealth in reset times. And for that, I can only say, thank God for the community. Thank God for the sanity, the anti-gaslighting, that having normally sane-minded people that see the world for what it truly is around me, and being able to talk real facts without worrying about what you have to say, and also by being able to trade wealth together by doing one thing very well, and that's HVF method, which is brilliantly recorded, and you will see implemented in the charts when you trade. Thanks for watching, and goodbye for now.